Well, we just survived the first full week after the reverse split, and a lot happened. We got a 58-cent dividend distribution, 100% of that income, no ROC at all. Robinhood delayed everyone's payments. My margin requirements changed, and for the first time in months, YOLTY actually stopped bleeding. Plus, I pulled $223 in spike profits, and my IBIT call, yeah, that one is probably going down zero.
Here we go.
And a quick reminder, none of this is financial advice. This is just what I am doing with my money inside of ULTY. Welcome back, dividend stackers. If you're new here, this channel documents my journey building weekly income using YieldMax's ULTY ETF with margin, drip, and real life decisions along the way. And real quick, if you're getting value or just simply plain entertained from this journey, hit that subscribe button so you don't miss these weekly updates. Now let's jump into the numbers. Alright, so let's start with the reverse split because that's what caused the most confusion online. On December 1st, ULTY completed a 1-for-10 reverse split, and I need to say this clearly because a lot of creators were treating it like a stock reverse split. This is not a company, and this is not a bankruptcy warning. ULTY is an ETF, and an ETF reverse split is literally just math housekeeping. You saw it, your shares divided by 10, the price multiplied by 10, and your total value stayed the same. The reason people freaked out was because they compared it to a stock reverse split, which usually does signal distress. But ETFs don't work that way. They don't have earnings, debt, or bankruptcy risk like a company does. The split happened simply because the share price got too low and they wanted to recalibrate it. So yes, the reverse split happened, but for holders, nothing good happened, nothing bad happened, nothing really happened at all. It was just optics. And this brings us to the portfolio. So at the close of Friday, ULTY's market price sits at $39.98. My share cost basis now sits at $54.38. And my break-even price sits at $46.16. So it's going to be a little bit weird seeing that for a while, but those are the changes that the reverse split made happen. As you can see in the middle there, my shares are now sitting at 281 shares, and I'll explain all that once I get to the transactions. So as stated, nothing basically changed. My market value now sits at $11,234.38. My total out of pocket, including dividends, sits at $15,280.78. My out-of-pocket invested, which does not include any dividends, sits at $12,971.92. And my lifetime dividends received now sits at $2,308.86. That was due to the dividends paid out this week of $160.55 for myself. My unrealized gain now sits at $4,046.40, which is a negative 26.48%. And my true gain, now making an improvement, now sits at a negative $1,737.54, which is a negative 13.39%. I don't know, but it looks like we're making a comeback. With this week's distribution not having any ROC, I'll continue to monitor these taxes as well. My after-tax dividends year to date sit at $2,169.63, which I'm estimating $139.22 of those going to Uncle Sam. I'll review my margin here shortly as well, but my equity does stand at $11,083.21, and my margin $151.70 being used. That puts my Robinhood buffer at a 29.1%. And again, I'll review that here in a moment. For those of you that have been following me along, you will see a difference here. What I basically did was consolidate all of it into one. That was just the easiest thing to do instead of adding formulas. And if you hold this spreadsheet, I recommend you do the same thing. Basically, take the quantity that I own, $281, at my price at $54.38, which we're taking off from Robinhood, making a note there that this is due to the reverse split adjustment. No changes in anything else there. For my dividend tab, nothing changes here either. I just continue to add the dividends and the shares that I were recording at. You can see there that I did have 273 shares at 0.5881 dividends per share. My gross dividend was $160.55. So I'll just continue recording that, but that will all stay in there. Basically, nothing else changes there. It's just the tracking portion of it, which I will continue to do on this page. Now let's take a harder look at the margin because Robinhood made a change here. The margin maintenance requirement on ULTY is now sitting at 70%. That tells you Robinhood sees this ETF as volatile and high risk. So many posts and comments all sharing this part.
I did expect this.
As you can see, my margin use now sits at $151.17. and my buffer sits at 29.04%. I have an available margin of $12,819.
And really, the distribution hasn't hit my account yet. So
In other words, I'm completely safe.
at this time, I'm not playing with margin with ULTY, and I would never recommend it to anyone. Margin calls
Can destroy accounts, especially with high yield ETFs that move like roller coasters. Down here also, you can see my IBIT position. Of course, that hits 100% maintenance ratio, and I'll talk about that later. But the annual rate is still the same, 5.25%. Of course, I'm not paying any daily interest right now. As although I'm using $151, 1,000 of those are interest-free due to Robinhood Gold. So unless the maintenance ratio for ULTY on Robinhood changes from the current 70% and drops down to at least 25 to 30%, I do not plan on putting any ULTY on margin. But it is good to know that I have margin available to use. And as I will share with you later, I have been using the margin on some of my SPY daily trades. All right, time for this week's macro minute. A lot happened this week, so let's dive in. First up, the market is heating up again. According to CNBC, the S&P 500 closed higher for the fourth straight day, notching a win streak and coming within 0.7% of its all-time intraday record. The reason? A light inflation reading. The Fed's primary inflation gauge, the PCE index, came in softer than expected. Core PCE was at a 2.8% versus 2.9% expected.
month over month, 0.2% right in line. And the market loved it. Investors are not pricing in an 87% chance of a rate cut next week. 9 of the last 10 sessions were green, which is pure momentum. One analyst even said, this basically confirms the market's expectation of a cut. And Bitcoin slides towards 90,000 on Fed and inflation fears. Investing.com reported that Bitcoin slid towards 90,000 this week as traders waited for the same PCE inflation number and Fed decision. That drop, and more importantly, the sideways drop, is why my IBIT call got smoked. Sideways movement destroys options premium. That's just how it goes. Bitcoin is still in a long-term uptrend, but in the short term, this was a volatility cool-off. Third up, the Fed drama. Reuters reported that the Federal Reserve is internally split heading into next week's meeting. Some officials want faster cuts to support the cooling job market. Others want to keep things to finish off inflation. Powell is caught in the middle. This internal debate is exactly why markets respond so aggressively to even tiny inflation surprises. So let's see what happens there next week. And speaking of the job market, we got a surprise. Reuters reported the largest drop in private payrolls in over 2.5 years. That's nothing. A weakening labor market is usually a strong argument for the Fed to begin easing. Soft inflation plus soft jobs equal higher chances of a rate cut next week. Consumer spending is still holding up, and MarketWatch says this could even support a strong GDP finish for 2025. But the same article asks a big question: is the momentum fading? Holiday shopping is strong, but energy prices and inflation over the last year have stretched some households thin. And CNN reminded everyone that earlier, consumer spending had actually stalled as inflation remained stubborn. So we're seeing mixed signals: strong seasonal spending, a long-term fatigue. And oil also made headlines. Reuters reported crude hit a 2-week high, driven by the Fed rate cut optimism, new supply concerns, and the Middle East shipping tensions. Higher oil usually means upward pressure on inflation, but this week's jump was moderate, not enough to spook the markets. And gold gains Fed rate cut optimism. Silver hits record high. Gold also ripped higher, hitting new highs as investors positioned early for rate cuts. When rates fall, gold shines. That's exactly what we saw this week. Finally, volatility. The VIX closed around 15.4 according to MarketWatch. That's near multi-month lows, and it's exactly why SPY scalping has been so predictable lately. Calm markets equal clean price action. Clean price action equals easy sniper setups. And that wraps up this week's Macro Minute. Stock market approaching record highs, Bitcoin cooling off, Fed divided, payrolls dropping, consumer spending mixed, oil rising, gold ripping, and the VIX is falling. We got a busy week ahead. All right, back to the portfolio. So let's talk price. ULTY is still down about 14% on the month. That hasn't changed, but the last week finally flattened out. We got stability, no huge red candles, no massive sell-off, just stabilization. And listen, stabilization is a good step before any reversal. This doesn't mean YOLTY is going to pump. This doesn't mean the ETF is saved. But for the first time in a long time, the bleeding stopped. That alone is a positive sign for holders. Now let's talk about something that did go well this week, my SPY trades. I ended the week with a positive $223 in realized profit, up 17% for the week. And over the last month, I'm up $965. And let me break down the trades real quick. I definitely got greedy on the last one as I lost $58 on a $687 call, but the rest were basically positive. A $685 call, which was a positive $102. A $685 call again, which I sold a little too early for a negative $6. Another $681 call for a positive $50. A $680 call for $101, and a $680 call for a positive $34 there as well. Use these indicators on the screen, and that's right there is why I scalped SPY. I have some predictable volatility, tight spreads, repeatable patterns, clean entries, and structured-based exits. You don't need to be perfect, you just need to be consistent. As of right now, SPY has become my side income, slow, calm, controlled, quick in and quick out. A lot of you asked for more SPY content, and yes, I will eventually build a full methodology video. In the meantime, those $965 over the last month have helped me pay down some of my margin, and I will take that. And back on the screen here, I have the 4-hour daily chart for SPY, and you can see it's basically strong. Since that last buy signal on November 24th, the SPY has basically gone up. That's why I like these indicators, as overall they also help me with my overall 401k account. Again, these are not signals, these are indicators of what the market is doing. And since November 24th, it's been nothing but up. And now let's talk about my trade that nobody wants to talk about. My IBIT $53 call expiring 12/12. I bought it for $176, is now worth $52. I'm down 70%. And let me be honest, this thing is probably going to zero. This was a speculative play, a lotto, a momentum bet. I already mentally wrote the trade off, and if it goes down to zero, so be it. This is part of trading. This is part of the YOLO experiment as well. Something I took upon myself to do here. And you know what happens? The second you sell the position, it shoots straight up, so I ain't selling. So of course, I'm gonna let this sucker run to expiration just to avoid jinxing myself. All right, now I wanna hear from you. Did your ULTY dividend hit yet? Yes or no? And what broker are you using? What do you think about 100% income distribution this week? Bullish, bearish, or surprised? And the last question I have for you, and be honest, would you cut the IBIT call or just let it right to zero? I wanna see what the community thinks. So let's wrap this week's video up. If you enjoyed this breakdown, hit that like button. It really helps the channel grow. Comment below, let me know what you think. If you want the spreadsheet I use for tracking dividends, margin, true gain, and more, it's on my Buy Me a Coffee page, linked below. And this is a reminder, none of this is financial advice. This is just what I am doing with my money inside of YOLTY. See you in next week's video. YOLTY YOLO out.